Okay, this is a very difficult market that we're involved in right now. It's a lot is going on. There's geopolitical stuff happening. Obviously, there's a conflict in Ukraine. It's hard to know what's going on exactly, and in war, truth is always the first casualty, right? So by design, it's hard to know what's happening there. There's other geopolitical conflicts happening that we're not reading about so much in the media, like what's going on in Yemen or Somalia right now. There's also weird things happening in commodity markets. There's inflation. The economic backdrop is very strange. And we're also emerging from kind of this fugue from the coronavirus lockdowns. And we kind of feel like this kind of what we've been told all along is maybe not as true as we would like it to be. And weirdly, there's a war happening all of a sudden. So there's just a bunch of things that are happening. And the stock market has been performing pretty badly, to be honest. I mean, we're down mid to high teens for all the major indexes in the US. So that is just a difficult environment to invest in, and people are struggling, and this is normal. So I guess I want to just get across a couple of ideas. First of all, just when the stock market is a difficult environment and when it makes you stressed or concerned, this is information about what your true risk tolerance is. So this is the first idea I want to convey. Basically, in a vacuum, we all think we have a risk tolerance that's higher than it actually is. Let's be honest. And when the difficult market actually happens onto us, that tells you true information about your risk tolerance. So if you're uneasy, if you're stressed about what your investments are doing, then your risk tolerance is lower than you think it is. And I want you to listen, okay? And make sure you have more cash. Make sure you're saving more money. Make sure you own fewer stocks. And don't idealize what your risk tolerance actually is. Okay, that's idea number one. And then idea number two is really about living your life. The other real sort of, I guess that it's a shame when your investments are actually starting to take over other life domains, right? You want to make sure that you're living a healthy life outside of the investment domain and that the one doesn't contaminate the other. So I think the other thing I would counsel is make sure you're living healthily, that you're sleeping well, that you're eating well, that you go outside for a walk, right? You get away from the screens or stop looking at your statements for a little while, and just remember that real life is day-to-day life and you want to live that life well. The investing stuff, it's only money, right? It's only numbers, pixels on a screen, right? So you want to make sure that this domain only encroaches on your life in an appropriate way, not to excess. And again, when the market's not going well or when things are unsettled, you get information about to what extent you're letting this investing domain encroach on your regular life, okay? So just some wisdom for what it's worth on how to deal with these kind of markets and how to deal with them in a healthy way, all right? Thanks for watching.